Okay, we've got a viewer question here. I'm 60 years old. I've got $1 million either in a 401k or a regular IRA. Hey, Azul, should I convert into a Roth? Let's go for a walk and talk about this. And a lot of videos on this subject are going to have a lot of math and make this fairly complicated. And the reality is it is a little complicated, but that doesn't mean that a 7 or 8 minute video on this topic has to be complicated. So let's jump in, and let's jump in first with a quick story. When I graduated high school, I'm turning 59, so you can do the math. The top income bracket in the United States was 70% federal, 70%. So that means whoever earned that money, 70 cents went to the US government for every additional dollar they made, and 30 cents went to the individual that earned that money. And as we speak today, that top bracket is 37%, right? So the top federal brackets have come down quite a bit during my lifetime, during my time as an adult, since I've been 18. So why am I opening this conversation with talking about historical tax brackets? I'm starting that because that's really what the Roth conversion comes down to, is what your view on taxes in the future are going to be. And if you think taxes are going to be identical to where you're at now versus maybe 20, 30, 40 years from now, then for the most part, you're indifferent between doing a Roth conversion. And let me just give you high level math on that. We're not going to go too much into detail, but let's say your tax bracket is 20%. Your federal tax bracket is 20%. Let's say that's all you pay. Okay, so if you've got $1 million regular IRA, regular 401k, and you do not convert it, right? You're not paying any tax now. So let's say in 20 years, let's say 10 years to give me easy math, your account doubles in 10 years. So your $1 million IRA is now worth $2 million. Let's say tax rates stay the same. You pay 20% on that. 20% of $2 million is $400,000. Good for the US government. And you end up netting how much? $1.6 million. Now let's do the other example. Let's say you convert to a Roth today, and let's say your taxes that you're going to pay on that conversion is 20%. You had $1 million. Now it's dropping down to 800,000. You pay tax on that. But now you never have to pay tax on it again, right? And let's say it doubles over the next 10 years. Well, you've got the exact same $1.6 million. So why do I open with tax rates? Because the question about whether you should convert or not has everything to do with what you think taxes are going to be. I should say it has everything to do with what taxes will be, right? What we think about it is irrelevant. What I think about, dying at 60 versus dying at 80 is irrelevant. It's not my decision. That's God's decision, not mine. It's the same thing for us with our taxes. It's not our decision. It's the government's decision. It's who we elect into office. There's a reason, by the way, that election day, federal elections are held as far away from April 15th on the calendar as you can get it. This is not a political statement. You don't want to know my political views. Half the people would love my political views. The other half would think I'm an idiot. So we're not going to go into it. But it has everything to do with what tax rates are going to be in the future. However, not entirely, because there's also some other things that you need to think about. And let's talk about what those other things are that you need to think about. The other things is, what happens when you pass away? Would your kids rather inherit a Roth or a regular IRA? And I just went through the math with you there earlier. It's the same thing for the kids. If it's money that comes out of your account, in theory, they're somewhat indifferent. But here's why it matters for a kid, is if you inherit an IRA, whether it's a regular IRA or a Roth IRA, if you're not the spouse, right? If I die and my wife gets my IRA, she plays by her own, she has her own regular RMDs. It's as if it was hers all along, right? But if a non-spouse inherits an IRA, they have 10 years from the date of death to withdraw all that money. So that could be a fair amount of taxable money that they don't have a choice as to how quickly they're going to take the money out, right? So earlier I said if tax rates are the same, you're indifferent. And I said, however, right? So that's one however. Another one is there are required minimum distributions on a regular IRA, but there are no required minimum distributions on a Roth IRA, okay? Because you've already paid tax on that. So the RMDs can bump you, can have unintended consequences for you. I think the government intended for these consequences, but what you pay for Medicare Part B, B as in boy, which is your doctor visits, stuff like that, not hospitalizations. By law, Medicare Part B is set up where the current beneficiaries, the current people getting Medicare Part B have to pay 25% of the premium. But the way that is done is it's done by income. So some people pay quite a bit less. I think the lowest current monthly premium for Medicare Part B, which is your doctor visits, stuff like that, is, I believe it's about $165 a month. But then if you make a lot of money, and I think a lot of money the government says is $500,000 a year or more, that premium can go up to, do I have it written down here? It goes up, not catastrophically. I think it's like $500, $560. I do have it written down. And that's called IRMAA, IRMAA. You can look this up. And that stands for income related monthly adjustment amount. So, that could be an extra $400 a month for you that's driven by the required minimum distribution. So we now have two howevers. And then there's also a third one, which is impacts how much of your Social Security gets taxed. So, for a lot of us watching this are probably going to have 85% of our Social Security tax. If you're married filing jointly, if you're making more than $44,000 a year, 85% of your Social Security is going to be taxed. I'm throwing around a lot of numbers. I do need to say I'm not an accountant, and I don't know your specific situation, right? This is a YouTube video. The purpose of my videos is to put things on your radar screen. So work with an accountant, work with a fee-only financial advisor. You can find one just by Googling that term, fee-only financial advisor. Okay, so now we have three howevers, right? And then the last part is you have to remember that these required minimum distributions, right? Let's say you have some money coming in from, you've got dividend payments coming in. Maybe you have a rental property. These required minimum distributions are tacked onto the top of your tax bracket, not at the bottom, right? So all these other income streams are coming in. And then the RMD is, but for the fact the government makes you take that money, you wouldn't take it out. It wouldn't be taxable ordinary. You wouldn't be recognizing that taxable ordinary income. So you need to think about it as the marginal tax bracket, which is higher. And that can be, 20% could be pretty low. If that was starting at zero and that's what you were going up to, the 20% bracket lets you earn quite a bit, but you're tacking it on to other sources of income. So that's, what are we up to? 4 howevers. So given the fact that the U.S. economy, I've got it down here, in 2022 was a $27 trillion economy, given that our national debt is now $32 trillion, it's not quite there, but it'll be there in a couple days, a couple hours. That was by the Treasury site, and they update it by the minute, which I thought was really quite interesting. So by the time you watch this, highly likely the federal debt will be $32 trillion. So given that our national debt is more than 1 times GDP, do you think tax rates are going to be lower in the future? They might be. The national debt is higher than when I graduated high school, when I said that the incremental tax rate, the top tax rate bracket was 70%. So who knows, right? I don't know for sure. But these are the types of things that you should be thinking about for doing a conversion for a regular IRA, a regular 401k, and thinking about should you convert that to a Roth. If you enjoyed today's video, please give me a thumbs up. And if you like this video, I know you're going to like this video up here where I talk about average income for retirees, and this video down here where I talk about 5 reasons to retire as soon as you can. Thanks for watching. Bye-bye.